Hello everyone, good morning. Welcome to another episode of Daily Data DGen. My name is Flo. Every day I help you decrypt and analyze the NFT markets. Today we are Tuesday, 3rd of May, and we're going to talk macro. We're going to talk about the overall state of the market, what's going on outside of the NFT space, how it does influence the NFT space, and where are we right now in the NFT market, especially on collectibles. So guys, if you like the content, please subscribe. If you don't like the content, please subscribe as well because you have to be patient. It's just my practice time right now, and in 1 year or two, I will be a machine at speaking like this. So yeah, it's just part of the journey. Those long, weird sentences I sometimes say, but let's get started. So what you have here is the cryptocurrency global chart. According to you, would you say we're still going up, we're still going down? This is a hard question to answer. The overall trend looks like we're going sideways, right? But you could also argue that's a giant head and shoulder. So it's a trading formation where you have the first shoulder, the head a bit higher, and then the shoulder. So it could be either a big range of accumulation between, 1.3 trillion and 2.9 trillion, but we can see we've put also lower low since the low of July 2021. So we're going sideways in crypto, which is quite astonishing because if we look at the general American market, the S&P 500, for example, so there's been a really strong correlation during those periods of stress between Bitcoin and between the S&P 500. And as you can see, the S&P 500 has historically been moving above its average, moving average, rather it's simple or exponential. And now we're starting to put lower low. You see, we've put a low, try to went higher, lower low. So that could be the sign of a reversal pattern and a downtrend starting. And if the S&P 500 start to go down, we've seen Netflix losing a lot of value and stuff like this, then it's highly likely then Bitcoin also will go down because of its current correlation. But look at that. We're not going down so much, actually. Despite all the uncertainty, despite all the stress because of the war, because of all of this, usually risk assets such as S&P 500 or Bitcoin, they just are correlated in those periods, but it's not so much the case. I mean, of course, we went down, but we're not going much more down. So could it be that the Bitcoin started to get uncorrelated? Well, could be. But why does it interest us, actually, the price of Bitcoin in the NFT space? It's not so much the case, right? Well, actually, there is kind of a inverse correlation between the NFT market and the Ethereum price. The Ethereum price is highly influenced by the Bitcoin price. If Bitcoin is above its 21-week moving average, meaning its bull market support band, then that's when altcoin perform, such as Ethereum, although Ethereum is not really an altcoin. So Ethereum outperform. And actually, when Ethereum is chilling above its weekly moving average, so it's kind of in a bull market configuration. Right now, it's not the case. But when it does that, that's when NFT historically attempt to do super good. So right now we are below those historical movements. So there's still quite some place for Ethereum to grow. And that means that the liquidity in the NFT market is not necessarily flowing there yet, or is not necessarily flowing big time in NFT either. So yeah, that could be kind of a macro bottom for Ethereum. If you look like we have some kind of good resistance here, that would be interested also to check the Ethereum on BTC. So let me give you a little hack. On CoinGecko, if you change here, you put Ethereum on BTC and you have the chart actually. Let's zoom out for a year a bit more. So look, the chart looks pretty good. The chances that Ethereum outperform Bitcoin is quite high, but if the market crash completely, Bitcoin will outperform every other coins, because that would be kind of the place where to run, in case of big crash. That's probably Bitcoin that will suffer the less compared to other crypto in terms of volatility. And within this, we have the crypto market, the NFT market, sorry. The NFT market with the coins related to NFTs, you can see slightly going down. I mean, over the last 7 days, the metaverse are the ones suffering the most. The capitalization are really bleeding, and ApeCoin is back to acceptable prices, I would say. So NFT market kind of bleeding, but is it really bleeding? I think there's a redistribution of the liquidity of the money on the market. You can see right now it's trading by volume. You can see other did for the sides, Mutants and Bored Apes are the three kind of blue chip, most valued coins that are actually suffering heavy loss. So bad times for Yuga Labs. That's why I put the hangover stuff on the thumbnail. But you can see for the rest, it's beautifully green. You can see beautiful rebound of most of the blue chips. Pretty big time, so it's not like, okay, there's been a bubble in the past in the NFT market, but does the bubble has burst once again with us? Not exactly, because you can see, for example, the blue chip index of NFT Go. Well, we were quite recently in all-time high, the 1st of May, meaning the valuation of blue chip has never been so high. So of course the volume went down, the trading also. But what does it mean? That means that actually lower collection, all those 10K collection, they keep on bleeding, they keep on going to zero. But the blue chip, they are the one that right now centralize all the liquidity, all the money of the market. So it's the configuration of a bear market, I would say, because you put your asset where it's less risky, although you keep some exposure to risk, obviously, with NFTs. But truly, you want, when there is a lot of stress, of uncertainty, you want to put your money in the safest place. That's why everyone is bleeding the collection to actually put money into reliable assets. The Yuga Labs still have to apologize, find a way to make happy all those greedy people. Sorry for you guys. And that's it. Other collections are enjoying the fact that Yuga Labs fucked it up, and probably at some point it's gonna flow back. But for now, the other collections are really winning. And what's the consequence of that? Well, we have a beautiful market quarterly report by nonfungible.com, which is a data website, quite interesting, where I get quite some sources, and every year and quarter they give us some awesome review about what's going on in the market. And so yeah, you should really check it out. It's free. It's really interesting. Let me know if you're interested. I can send it to you. It's really interesting to see, like, okay, the price between the collectibles and the volume is much lower than, for example, gaming or the amount of active wallets, but the prices obviously are different. And yeah, they compare to last quarter what happened in terms of volume. And yeah, we're definitely not in a bear market. I would say we are slightly trending down for now because of the uncertainty, but it's not either nothing catastrophic for now. We will see really a bear market once I would say the apes go back to below 100 ETH, and yeah, and even blue chips starting to suffer. For now it's quite okay. There's still a lot of money, a lot of ETH into the market, so don't stress out too much about it. Just choose your bet wisely. Right now the other blue chips are a bit overvalued. I've loved to buy one or two, but I should have done it during the sale. Now it's too late. All the assets took like 20, 30, 40% in 24, 48 hours. So forget about it for now. Thank you guys for tuning in. I hope you liked so much the content as I enjoyed doing it. I wish you a wonderful day. Let me know if you have any questions or anything you would like me to analyze, and I wish you the best. Take care, guys. Bye bye. Bye bye. Bye bye.